Good day, students. We'll be doing the exercise on cost and management accounting 2. And the exercise that I'll be doing is in chapter 12, and it will be exercise 12.10 in the topic of process costing. It reads as follows. Zioni Limited operates a process costing system in 3 departments. So it means they have 3 departments: Department A, Department B, and Department C. The following information is available for Department B. That means the process that we are dealing with is in Department B. That means there might be some of the receipts or something or material or product or work in process received from Department A into Department B. So there might be a receipt from the previous process, Department A to Department B, and this is for Department B, the month of June in the year 2004. We are given the work that is in process on the 1st of January 2004, which is 9,000 kilogram. That is opening work in process, and it is in kgs of material. We have previous department costs in Department A, and these are the costs that were incurred in Department A. And we added the material in Department B, which is 2,205, and we incurred the total conversion cost of 2,046. So now these are the costs that were incurred from the previous department, and these are the costs that were incurred from the current department. This is previous department. So it continues by saying that transferred in from Department A 12,000 kgs of material. That means we transferred these kgs of material, which is 12,000 kgs of material that was transferred from Department A. So now we had opening balance, and we also have transfer from Department A. Therefore now these are the kgs of material that will be recorded as the units. We have the costs that were incurred in June 2004. So now these were the costs that were incurred during the month of June. Then these are the during the month. These are opening balances. If you take note, opening balances, they are given to us in terms of rents. These are the opening balances, and these are the costs incurred during the month. We have material, we have conversion cost that is incurred in the month of June 2004. Then after we continue on that same note, it says work in process on the 1st of June 2004 was 70% complete in respect of material and 50% complete in respect of conversion costs. So now they gave us the percentage completion of the opening balance or the opening work in process. And it further says that the closing work in process at the end, which is the 30th of June 2004, was 80% complete in terms of material and 70% complete in terms of conversion cost, or in respect to conversion cost and in respect to material. However, we don't know the closing balance of the work in process, but we know only the percentage of completion of the closing balance. And again, we also do, or we know we don't know the opening balance, but we know that it was 70% in terms of completion. Then after, in the next paragraph, it further says that normal losses occur at the beginning of the process. That means normal loss occur at the end of the previous process, which is the beginning of the current or the new process or the new department. The normal loss occur at the beginning of the process and is expected to be at 10% of the units that were transferred from Department A. That means 10% of the units that were transferred from Department A is a normal loss, because units transferred in Department A, they are in the beginning of this process. That means the beginning of process B will be the units transferred from process A. So now 10% of that will be the expected loss. That means loss that is uncontrollable. And if we look in the table that we have, the units that were transferred, look there, transferred in from Department A, 12,000 kgs. So now if we say that times by 10%, it will tell us that 1,200 will be regarded as a normal loss. 1,200 will be recognized as a normal loss. So now any loss that is above 1,200 will be abnormal loss, because they told us that normal loss is expected to be 10% of the units that were transferred from Department A. And here are the units transferred in from Department A. And 10% of that is the normal loss of 1,200 kgs of material. Then after, they say to us that 12,500 units were transferred to Department C. That means these units were completed. In simple terms, these units were completed. These are the completed units or finished units according to Department B. However, they still have to go through the process in Department C. Then after, it says there was a fire in Department B during the month. And whenever there is a fire, or there is a breakage of the machine, or there is a damage in the machine, or the machine broke down, and whatsoever loss that we incur, which is unexpected and which can be controlled, then that loss is abnormal loss. So they tell us that which damaged or destroyed 500 kgs of the products. So now if 500 kgs were damaged, remember this was unexpected. This was never expected at all, because we only expect that 1,200 units, which is 10% of the units transferred from the previous process, will be the normal loss. Any loss that occur because of the breakdown of the machine, or any loss that occur because of the breakage in machine, or the machine broke down, any of such loss will be recognized as abnormal loss. Hence, this 500 will be recognized as abnormal loss. It will be abnormal loss, loss that is unexpected and loss that is controllable. So now abnormal loss will be 500, while normal loss will be 10%, which is 1,200 kgs will be normal loss. However, this will be abnormal loss. Then after, it continues by saying that these units were 80% complete with regard to material and 60% complete with regard to conversion cost. Meaning 80% of the 500 will be recorded under the raw material, and 60% of this loss will be recorded under the conversion cost. Not the whole 500 will be recorded under the material and under the conversion cost. Only 80% under the material and 60% will be recorded under the conversion cost, because these units were 80% complete. Therefore, now only 80% can be abnormal loss. And such, with regard to the conversion cost, the units were 60% complete in terms of conversion cost, meaning that we have to allocate only 60% of that to the conversion cost, because we expect 60% of the loss, because these units were 60% in terms of completion. Then it says prepare a production cost report for product B for the month of June 2004 using the weighted average method of inventory valuation. You may assume that 1 unit equals 1 kg. So now kgs are counted as the units. That means 1 kg produces 1 unit. So now we know that whenever we are given such, we have to go straight to our table where we first have to record the opening work in process. Here the opening work in process 9 kgs. This is the opening work in process. So now that opening work in process, which is 9,000, should be recorded under the opening in the template that we have for process costing. So now this will be recorded under opening work in process. And our opening work in process, we can see there is OW, which will be 9,000 kgs. And there was also other units that were transferred from other departments. And those units that were transferred from other departments, it was units transferred in from department A. That means it will be recorded under previous process. That will be recorded under previous process. Therefore, now under previous process, we have to record 12,000 units. Under previous process, we have to record 12,000 units. Then now we go to the next one, and the next one will be, let me just use a smaller ink so that everything is a bit visible. So now that means we'll have 9,000 here, and here we'll have 12,000. Then after we continue to do our question, then now we continue and we check what else or which other units that need to be recorded. We only have 9,000 kgs. We only have 12,000 that was transferred from the previous process. And we are also aware that there is the closing that is 80% in terms of material, but we don't know the closing. And opening, we know that work in process was 70% and 50% in terms of completion with respect to material and conversion cost. And we also know that normal loss is 10%, which is 1,200 units that we are aware of. And we are also aware of the fact that 12,500 units were transferred to Department C. So now these are the finished units that will be recorded to all the other departments, and they will be recorded to all other columns under the finished products. So now it will be under completed, we record 12,500 units. 12,500 units, it will be 12.5 throughout. 12,500 units. Remember, 12.5 will be 12.5 throughout, meaning the units must have been finished in terms of all the components or in terms of all the elements with respect to material, with respect to previous process, with respect to conversion cost. That is why now when it comes to the completed units, we record them in all the columns and also previous process, because we are dealing with the middle process here. So now we have to recognize the previous process, that these kgs were complete in terms of the previous process. So now we go to the units that are the normal loss. We know that the normal loss is 1,200. This has been calculated by us. We said 12 times by 10%, because we were told that normal loss here in this column, normal loss is 10% of the units that are transferred from Department A. So now we calculated 10% of 12,000, and if we do that in a live calculator, it will be 12,000 times by 10 divided by 100. This will give us 1,200 kgs, and those 1,200 kgs will be recorded under the normal loss. And our normal loss will only record this N loss. This is normal loss, 1,200 units. And they told us that normal loss occur at the beginning of the process. So now if normal loss occur at the beginning of the process, it simply means that normal loss is taking place at the end of the previous process, because the end of the previous process becomes the beginning of the current process. So now that means normal loss will only be recorded under the output column as 1200, not to all other columns. Then they told us that, I just want to show you that, where they said normal loss occur at the beginning. Here in this sentence, normal loss occur at the beginning of the process. Normal loss occurs at the beginning of the process. That means beginning of the process is the end of the previous process. So now that means this loss will only be recorded under the output. Secondly, we need to acknowledge the abnormal loss, because there was a loss which was because of the damages, where it says there was fire in the building. So now in this case, because of fire, there were damages in the units that we are producing, and that led to 500 kgs of our material or kgs to be damaged, which is equivalent to 500 units. So now that is abnormal loss, and abnormal loss will have to be recorded throughout in all the columns. And that abnormal loss, we record this abnormal loss under the abnormal loss. This will be 500. Then it will also be 500 under the previous process, because these units were already done in terms of the previous process. However, now with regard to raw material, we have to allocate only a portion of the raw material, because the units that were damaged, they were 80% complete in terms of material. They told us that these units were, they say these units were 80% complete with regard to material and 60% complete with regard to conversion cost. So now it's only 80% that will be allocated to raw material with regard to this loss, and 60% will be recorded to conversion cost concerning this abnormal loss. So now that is why we'll have to say the 500 units times by 0.8, which is 80%, that will give us 400 of the abnormal loss that must be allocated to the raw material. Therefore, now under the raw material column, it means we have to allocate only 400, which is 80%, because the raw material was 80% in terms of completion, or in terms of introduction or completion with regard to this product. Then after, we also say abnormal loss of 500 times by 60%. This will give us, it was, let me check if it was 60% or not. Abnormal loss conversion cost is 60%. So now we'll have to say yes, it is correct, it is 60%. Therefore now we say it is 60%, and that 60% is an amount of 300 kgs or 300 units that will be allocated under the conversion cost. So now we record the 300 under the conversion cost. Then now we have to check for the closing, because there definitely must be a closing. And whensoever you are not given the closing, you first have to calculate the total under the output, and the total will be 9,000 plus 12,000, and this will give us 21,000 to be recorded under the total, 21,000 units. Then after, we say we have the under the output again, under the output we have 12,500 plus 1,200 plus 500, which is abnormal loss. That gives us 14,200, and the total units that we had was 21,000. Here's 21,000, but we see now the only total under the output is 14,200. That means we say less 21,000 rands. This will give us 6,800 as the closing units. So now that is how you calculate the closing units when they are not given. If you want, you can just say 21,000, which is, these are the units that were introduced to production, 21,000, less 12,500, which is the units that were completed, 12.5, you subtract that. Then after, you subtract the units that are lost, which is the normal loss, 1.2. Then after, you subtract the 500, which is abnormal loss, the controllable loss. then that will give you 6,800 to still get to the same 6,800, and 6,800 will be the closing inventory, 6,800 units, and it will be 6,800 units under the previous process, because obviously this material was complete in terms of the previous process. But we need to check now with regard to material, what percentage or at what percentage was the material complete in with regard to the closing units. The material was 80% complete or introduced with regard to the closing units. They say that the closing work in process at the end of June 2004 was 80% with regard to material. It means it was 80% regarding material and 70% with regard to conversion cost. So now that means the 6,800 times by 80% will give us the total that will be allocated under the material control column. So now our closing will be recorded as 80%, which is 5,400. Then we record that 5,440 under the material. Then we also say 6,800 times by 70%, because it was 70% complete in terms of conversion cost, which will give us 4,760 runs or 760 units. And let us confirm that conversion cost was 70% in terms of completion by the end of the year. Yes, 70% complete in respect of conversion cost. That is the closing stock. So now we have covered all the units. And if all the units are covered, then we can calculate all the totals now. And in doing so, obviously, under the output, it will give us the total of 21,000. It will be the total of 21,000. Then the next one will be 12,500 plus 6,800 plus 500. That will be 19,800. 19,800. Then it will give us the same. No, it will be 12,500 plus 5,440 plus 400. It will be 18,340. 18,340. Then we will have 12,500 plus 4,760 plus 300, which is 17,560. So now this will be the units, the equivalent completed units that we have just done now. The equivalent completed units. Then after we go to our cost statement. We go to our cost statement. And our cost statement now, we are dealing with the amounts in this case. We have to start with the previous process, opening balances, taking that into account. So now we do have opening balances that were given to us. And our opening balance that were given to us is previous department cost, department A, is 2,780. That is it tells you previous department, which is department A. And it said the following information is available for department B. So now we are in department B. And we have the costs that were already incurred in department A, because when they were processing this material, there were costs that were incurred, 2,780. Then now this cost must be recorded under the opening work in process, previous process. That will be 2,780. 2,780. Then after we check for other costs, another cost that we see here is the cost of material that was added. Material added in department B and conversion costs that were added now in department B. 2,205. 2,205. Remember, these are under the opening balance 1st of January. They are all under the opening balance. So the 2,205 and 2,046, they are under the opening work in process. And the column there, it says opening work in process. So now hence we record everything there. It is 2,205, 2,205, and 2,046, 2,046. And the total for that will be 2,780 plus 2,205 plus 2,046, and this will give us 7,031. 7,031 will be our total. Then after we go to the next amounts or next figures, under the cost statement, remember we only record the costs, only the costs. So now we check again and we realize that we have the costs that were incurred in the month of June. The costs that were incurred in the month of June. And these costs are the costs that were transferred from Department A. Oh, that's when the units, those were the units. Cost incurred in June. In terms of material, in terms of conversion cost, 4,214, and they are the costs that were transferred in from June. That is 5,536. Those are the costs that were transferred from the previous process. So now we record that as under the first current cost previous process. That will be 5,536, 5,536. Then we record the current cost now that were incurred in the current month of June. The current cost with regard to material is 4,214. Conversion cost is 6,734. We all record this under current. We all record this under current because they are for the current month. Therefore, now under material, we record that, and under conversion cost, we'll also record the same amounts. So now it will be 4,214, 4,214, and 6,734, 6,734. Then this will give us 5,536 plus 4,214 plus 6,734, and this will give us the total of 16,484. 16,484. Then now we have calculated all this cost. We can have our total cost now. Our total cost is very simple. It's opening plus current is equal to total cost, meaning 2,780 plus 5,536. This will give us an amount of 8,310. 8,310.16. Second one is 2,205 plus 4,214, 6,419, 6,419 rands. The next one is 2,046 plus 6,734, and this gives us 8,780. Then after we give the total at the bottom, which is plus 6,419 plus 8,316, and the total will be 23,515. 23,515. And with that being said, then now we can calculate our total equivalent units. Remember, our total equivalent units come from the previous table that we have done. total equivalent units come from the quantity table where we dealt with the units. So now it means it comes from the quantity statement. Everything that is in this column comes from the quantity statement. And we are here, and when we are here, this line is in line with previous process, and there is a previous process here. Here is PP. PP is equal to PP. Nothing changes, guys. So now in that PP, we just have to record the same total of the PP, which is 19,800. We take that 19,800 column for PP and the same row for PP. Nothing changes. Then after we say, we come to the next one. The next one is, I don't know why it does not record now. I have recorded 19,800 and we save that. 19,800. Don't know why it does not want to save. So now we record that 19,800 under total 19,800. There it appears. Then after we record the next column, the next cell is raw material. Here's the raw material. You can see raw material. We're in the line of raw material. Here's raw material. It's the same line. So now we take the amount of units under the raw material column. You take that, you paste it as 18,340 as it is. The next one is conversion, which is 17,560. Nothing changes. You take the amounts as they are. The total here is not important, but the total units is not that quite important in this case. Then after we calculate the unit price or unit cost, which is the cost of the previous process, which is 8,316 divided by 19,800. This will give us 0 rand 42 cents, 0.42. The next one will be 6,419 divided by 18,340. That will be 35 cents, 0 rand 35 cents. The next one is 8,780 divided by 17,560. It gives us 50 cents, 0 rand 50 cents. And the total will be plus 0.35 plus 0.42, and it gives us 1 rand 27 cents. That will be 1 rand 27 cents. 1 rand 27 cents. That is the total cost per unit. Then after we do our cost statement, where we start with the completed units, and the completed units were 12,500, and we times that by the cost per unit 1 rand 27, which is this cost per unit, always 1 rand 27. And remember the completed units, here are the completed units, 12,500. So we take them as they are. Then after we just say times by 12,500, this gives us 15,875. It gives us 15,875 rands. And we continue on that same pace and on that same note. Then now we go to the normal loss, and we know that the normal loss will not be accounted for because it's at the beginning of the year. So now we do nothing about the normal loss. We only go to the abnormal loss. Abnormal loss, we check for the previous process. That means we first have to take the previous process units. You multiply it by the current cost of the previous process per unit. Then after we take the raw material units, multiply by the raw material cost per unit, and we take the conversion cost units, we multiply that by the conversion cost per unit. So now that's what we'll be doing. Our previous process units, here is the previous process, PP, remember, here's PP. Total units of PP, it is 19,800. You take those units as they are, 19,800. You multiply that by the previous cost per unit. And here the cost statement. Here the PP, previous process. And where is the cost per unit? Here the cost per unit of the previous process. So you multiply this by 42 cents. Always nothing changes, guys, when it comes to this. In fact, everything remains the same. Then after we say 0.42 times that by 19,800, it will give us 8,000. It will give us 8,316. 8,300 and okay, sorry. We are dealing with the abnormal loss. Sorry for that. I've just done wrong calculations. Apologies. We are with the abnormal loss, and our abnormal loss, we look under the PP. Okay, the PP, nothing changes, but under abnormal loss, here's our abnormal loss. Previous process is 500 units. Sorry for that. 500. We don't take the total. 500 units. So now we take the 500 units. Then we say 500 units. We multiply that by the previous process cost per unit. 42 cents does not change. So now we say 500 units of the abnormal loss under the PP column. We multiply that by 0.42 cents. And it gives us 210 rands, which is the abnormal actual cost in rands. Then we take the abnormal units under the raw material. Therefore now we say this is abnormal loss, and the raw material, where the abnormal loss, raw material is 5,440. Sorry, abnormal loss, it is 400. Don't know why am I looking the wrong things. Abnormal loss under the raw material, it is 400 units that was allocated because it was, I think it was 80%. Then we say 400. We multiply that by the raw material cost per unit, and the raw material cost per unit is 35 rands. Here the raw material cost per unit 35 rands under the raw material. Here's the raw material. Then after we multiply the two, we say 0.35. We multiply this by 400, and it gives us 140 rands. Then after we take the abnormal loss that was allocated to conversion cost, and it's only 300 of the abnormal loss. Here the abnormal loss cell, and under the conversion we had 300. Then we say 300 units of the abnormal loss under the conversion. We multiply by 0.50 cents, which is conversion cost per unit. Then after we say conversion cost per unit, which is 50 cents, times that by the total units of 300, it will give us the conversion cost amount of the abnormal loss, which is 150 rands. Then we say 150 plus 140 plus 210, and this gives us the total abnormal loss of 500 rands. Total abnormal loss of 500 rands. 500 rands. Then we continue on that same note to do the closing part, the closing inventory. Closing inventory, we have to do it with regard to previous process, with regard to raw material, with regard to conversion cost. Then we go to previous process. Closing inventory. Here is our closing inventory. Previous process is 6,800. 6,800. Then we say 6,800 times that by the previous process cost per unit, which is 35 cents, 42 cents times by 42 cents. Then after closing again with regard to raw material, closing inventory, here is the closing work in process. Closing work in process. Closing work in process. Our closing work in process with regard to raw material is 5,440. Yes, 5,440. Then we say 5,440, we multiply that by the raw material cost per unit, which is 35 cents. 0.35. Then after we multiply the closing conversion units, and the closing units with regard to conversion cost, there it is stated, we can see it is 4,760. So now we say 4,760. 4,760, multiply that by 0.50 cents. Then after we can multiply everything to see how much do we have. Meaning we have to say closing 6,800 previous process times by 0.42. It gives us 2,856. It gives us 2,856. Then after we say 5,440 times that by 0.35, it gives us 1,904. Then after we say 4,760 times by 0.50 cents, which is 2,380 rands. Then we add the 2 or the 3, say plus 1,904 plus 2,856. That gives us the total of 7,140, and we say plus 500, which is abnormal loss, and we say plus 15,875. This gives us 23,515. 23,515. And this amount must always be the same as the one in the total cost. This amount must always be the same as this amount. If they are not the same, then there is something wrong. 23,515. That is 100% correct. So now let me do the last part, where now I have to do the work in process, and it's always important to understand the work in process. Work in process, this is Department B, because we are dealing with Department B. And we know that work in process will have an opening balance when necessary, and opening balance of the work in process will be on the beginning of the year, 1st of June in this case, 2004. That will be an opening balance, and our opening balance will be with regard to the opening balance that was given unto us. So now our opening balance, it will be a total of 7,031, because this is an opening work in process. This is the work in process opening balance, and the total opening balance is the total amount here, 7,031 at the bottom. So now it will be 7,031. Then after, I will have to immediately go to and check the previous process now. Check how much was allocated from the previous or working process of the process 1. Then now the working process of process 1, I think we did have working process that was previous process, that is in process 1. So now we take into account the previous process cost. The previous process cost, if you see under previous process, we have previous process, and that was opening balance. We recorded all that opening balance under the total amount. Then now we have to record under the current 5,536. That is the previous process cost that were incurred. Then we'll take into account material and conversion cost. So now this is the previous process. You can see that is under previous process. This is PP. So now that current cost previous process will have to be recorded under previous process. So now that will be work in process or department 1. That will be work in process. This will be department A, and that work in process from department A amounted to an amount of 5,536. 5,536, and we have recorded that. Therefore now what is needed will be material control. Then after we have to record wage control and manufacturing overheads. Wage control, this is conversion cost. Wages control slash manufacturing overheads. So now where we have to record our material separately for the current period. Our material for the current period is the current period of material. It is 4,214. That is our material for the current period incurred. 4,214, if I'm not mistaken. Yes, 4,214. That's the material. 4,214. Our wage control, this is conversion cost. Our conversion cost is the total of 6,734. Here the conversion cost 6,734. That is the conversion cost, which is labor and overheads. 6,734. Then after we record finished goods on the credit side, we know that finished goods. Then after, if there is abnormal loss, don't forget abnormal loss. Our abnormal loss, it was 500 if I'm not mistaken. Let us check that. Our abnormal loss, total cost of the abnormal loss was 500, and here's abnormal loss. Total cost of the abnormal loss was 500 rands. And completed or finished goods, these are the completed or finished goods. 15,875. 15,875. 15,875. And the minute you record all of this, then you know that you are done with this ledger account. And make sure, guys, that you record dates at the point of the date. If the date here is at 30th of June, please make sure that you record the date 30th of June. If this is 30th of June, it will be 30th of June and 30th of June if there is a date. And I don't know when the loss was incurred. We don't know the dates, but if there is a date, guys, and it's at the end of the period, make sure that you write the date, because some lectures, they can penalize you with regard to dates. Write the date of the entry. Now we record 7,031 plus 5,531. 5,000, let me check, 5,531 or 36. 5,536, yes. 5,536. 5,536. plus 4,214 plus 6,734. That gives us 23,515. That is correct. 23,515. That is exactly the cost. 23,515. Then after we subtract the finished goods, 15,875 less abnormal loss. This will give us 7,140. 7,140. This will be balance carry down on the 1st of July 2004. Then it will be 7,140. I know this will be 30th of June. This will be 30 June. And this will be on the 1st of July. And it will be closing balance. Closing balance. Our balance brought down. Let me just say balance brought down. Balance BD, and that is balance carried down. So now this amount, which is the closing balance, must be the same as the closing balance in the cost allocation statement. And there is the same. Closing value of the inventory, there is the same. And in the ledger account is the same. Then we know that this exactly is 100% correct. And with that being said, guys, I'll say thank you on my side.